or if you knew what you know about fractional investing 20 years ago, do you think you still would have gone down the traditional real estate route?
I mean, I would say most likely not. If the unless there were specific opportunities that were not accessible on the app. So if, for example, I saw a project that I really liked and it wasn't available on the app, yes, if I was really limited to wanting to invest in something like that. But as long as the app covers, a city, and my approach to investing tends to be very focused on central locations, basically looking for resilience. Like I said, I'm a low-risk investor. I don't want headaches. I'd rather not have higher returns, but then the risks of especially time wasted and of course money lost, because I have to spend my time making sure that I'm the best that I can be in my career or in the businesses that I run. So unless there really was, a gap in the app and a specific thing that I wanted to, I would not. So, and from what I've seen from this app, if I was investing in Dubai, it covers all the main areas that I'd be interested in. So no, I wouldn't.
And for you, is fractional real estate a replacement for investing in the stock market or even mutual funds?
I would say I'm not an expert, and I don't claim to be an expert in and I don't want to say to others how they should be investing their money. I have a very specific approach that made sense for me, that made sense for my peace of mind and my psychology, so that I could focus on my main work. I do rely a lot on friends for advice on how to do other things. But so I don't see it as a replacement, and I think everyone should figure out their own approach and what makes them happy and what works for them. In the end, I do think it's one of the options out there, and we all know diversification is something we hear a lot about and is very important. Geographical diversification, investment tool diversification. So I definitely would not say that this is the only way to invest. But real estate tends to be, a universally agreed upon, or not, I wouldn't say unanimously agreed upon way of investing. Definitely not. There are some people who big investors who don't like it because of the lack of liquidity, the long-term commitment. But those fit my type of profile. But even there, I think it should only be a part of your portfolio and approach.
I just wanted to clarify one point which you had made about when you invest with fractional real estate, especially like a platform like GetStake, you were saying how they basically give you a certificate proving that you're a partial owner of the property. What's the difference between that and, let's say, investing in a fund that invests in real estate on your behalf? And what happens if both of those companies go bankrupt? Like if the fund goes bankrupt versus if GetStake goes bankrupt?
That's a great question. I'm not in a position to answer. I haven't researched funds. In fact, GetStake also has the option of investing in funds, but I would imagine that it has its own legal setup, its own sort of checks and balances. But I didn't get into details. Basically, what happens if the company that owns the fund goes bankrupt. I imagine it would go into the same approach as any other entity that goes bankrupt. The regulators would step in, appoint someone to distribute the whatever assets there are in some sort of sequence of priority. And in that case, I would, first of all, because the fund should be investing in real estate, that those real estate assets are tangible. And I would imagine that the fund investors have a top priority Now, if there are lenders helping to finance and there's leverage and things like that, that might be a different story. And I'm not an expert in that. We'd have to talk specifically about a specific fund. But in this case, this is fully invested, fully financed by those investors. So if a property A is crowdsourced by, let's say, 1,250 investors, those 1,250 investors are the only owners of that asset. And I like that. And then there's a company specifically set up for those 1,250 investors. They get a shareholding certificate, just like any company that you set up. It's registered in DIFC, the Dubai International Financial Center, which works on world best practice legal system and an arbitration. And that company is then directly registered at the land department. So there is no one between those shareholders and the asset. It's directly in their owned by them, basically, and fully.
What incentives are in place for Get Stake to want to make sure that the properties that they're recommending or crowdsourcing actually do well and appreciate?
That's a great question. I'm getting into this and trying to understand that myself, and that's one of the things I think a lot about, which is everyone motivated in the right direction? Are there any conflicts of interest or divergent motivations? The way this particular app has set up their approach, I really like. They get a fee upfront on the acquisition. I think it's 1%, if I'm not mistaken, 1 or 1.5%. They also take an annual fee of 0.5% of the purchase price of the property to manage everything related to it. And then there's if they sell the property, or once they sell the property, they take also again it's 1.5% to 2% under corrections around those numbers. And they also have an incentive on any capital gains. So if the price, whatever the price is, if it's above the purchase price, they get 7% of that profit, that capital gains, and then the 93% goes back to the owners. Other than that, it's the same fee. So in the case of the city of Dubai, it's 4% to the land department, 2% to the agency, the brokerage firm. There are some small fees for setting up the company and then dissolving it once there's a sale. All the maintenance fees, the apartment service charges from the developer, etc., which anyway you would have to pay as the owner. Those are all on top. And they also have a very interesting tier system where the more you invest, the lower your fees are. So those fees that I mentioned up front and for the acquisition and the sale, you can actually reduce them by increasing your total portfolio with them. On the question, the one remaining question is which properties to choose, because that's the area where obviously they want to grow as fast as possible. And let's say they choose properties that don't perform so well. Obviously, that's not great for the investors, but they still make their fees. Now, they're smart people and they want to show performance for their investors, and if they're thinking long term, which it looks to me like they are. So they have that incentive to make sure that the properties perform as well as possible, that they buy the right places at the right prices. But just like any other investment, it's up to each individual to do their own research. And that's something that I do even on this app. I don't just blindly buy anything that is recommended. I have my own approach, which is very similar to the approach I've been using for 20 years. So I really like, for example, central locations versus distant locations, even if they come at a premium. So I'd rather buy a one-bedroom in the middle of a super popular central area than, let's say, something bigger that is distant from the center. The reason for that is I care about long-term stability and long-term growth, and I want to make sure that it's resilient in downturns. Now, the markets have been pretty good in Dubai the last few years, so everything looks like it's doing well. But just like any market, it can go through its ups and downs, and I want to make sure that in those downs, I have things which are resilient. So even if the rent drops a little bit, it drops a lot less than the properties that are, let's say, less special. Another big one is views. When the market is hot, people pick up any apartment that they can find because they're hard to find. But when the market is soft, renters are choosy, and you want to have that. I call it the love at first sight. You open the door and you have this beautiful view, whether it's green spaces or the ocean, or just a nice open view. It gives you that edge when they have 5-6 properties that they're comparing themselves to. The bit that I no longer control when I'm doing fractional investing was the part that I was doing, which was making sure that the maintenance was top-notch, that I had maintenance contractors on call in case of any issues the tenants had, that I'm very responsive wherever I am in the world. If they call me, I immediately solve their issues. If they need equipment replaced, we immediately buy it, in terms of the onboarding, the welcoming them into the place, making sure it's 100% ready for them. So that's something I am looking at when I'm using a third party, and I obviously do care, to see how they treat their tenants. This is not something that's visible to us when you're doing fractional investing, but just looking at the customer service that I've been getting on this app, if that's any indication of how they treat their tenants, then they're following the same approach, which is doing the right thing, taking that time in order to have longer term growth and not shortcuts and cutting corners. That's it.
Nice. So I guess moving forward, we wanted to keep this conversation pretty brief and just kind of scratch the surface of what fractional real estate investing is. If you guys are interested in learning more about fractional real estate, my dad and I are going to be managing some social media platforms. So we're going to have an Instagram and a X account or Twitter account where we're going to just discuss fractional real estate. I'm guessing you're going to have more to say than me, but I think I can bring like a young person's perspective into it, ask some questions that I know a lot of my peers might have as well. So I'm going to put the links to those social platforms in the description. And the main thing that we're trying to do is build a community of people that are interested in this. And so we're going to have a Discord where we're going to bring together, people of all ages that are interested in learning more about fractional real estate. And that's a great place where you can share your questions with us and with other members in the community. So if there's an apartment that you like that's listed on the app and you just had a question about it, feel free to upload your question into the Discord and we'll try and get back to you with with whatever help that we can get. And yeah, that's it for me. Did you have anything else to add?
No, that's it. I will be, as I continue to use the app, when I spot things that I like, I have been doing that anyway, sharing it with the friends, like the guy who referred me to the app. So I have a quick discussion with him. What do you think? Did you spot the same things that I did? And so we'll be doing that as well whenever we have time. Just share some tidbits. And of course, we always say, do your research. Make sure this fits with your approach. It's definitely something that we like, and we're learning as we go, and we're sharing what we're learning. So hope it works out for everyone.
Yep. Last thing is, if you do want to use GetStake, which is the platform that we're looking into. By the way, this is not sponsored in any way by GetStake. We do have a referral link which you can use. You get how much do the users get?
Anyone who uses the referral link gets around just under $50, like $40.
Okay.
Once they make their first investment, and then the person who referred them also gets the same, depending again on the tier that they're in. So those actually increase with the tiers. So they have some pretty cool bells and whistles on their app that make it interesting to share with others.
Yeah.